Hi, and welcome to Federal Appraisal LLC's video series. In this video, we will explain the different types of value used in appraisals. As you should already know, appraisals are opinions of value. Due to the many possible purposes and uses of appraisals opine on several different types of value. Therefore, the definition of value utilized in any given appraisal can vary significantly. As an economic concept, in layman's terms, value is typically the price or cost at which a buyer would purchase assets, property, goods, or services from the seller. In appraisals, the definition of value is often specified in technical detail. Market value is the most commonly used type of value for appraisals. For property taxation purposes, assessed value is used. You can find out more about these types of value in our other videos in this corner of the screen and linked below. Other examples of value that we will include in this video include value in use, investment value, fair value, business value, insurable value, value of going concern, liquidation value, disposition value, and more. The appraiser must consider a client's purpose and use for the appraisal to determine what type of value is to be appraised. Two appraisals for the same client and the same property may require different definitions if each appraisal is for different purpose and use. For example, consider an appraisal for real estate lending, which normally requires market value, versus an appraisal for IRS tax reporting, which normally requires fair value reporting. After client interviews and deliberation, it is the appraiser's job to set the proper definition of value for the client's specific needs, as required by the Uniform Standards of Professional Appraisal Practice. Market value is by far the most common type of value utilized in appraisal. We covered this topic in detail in another video. Let us just stress 2 points here. First, while common, this definition of value is not appropriate for all appraisals and their purpose and uses. Secondly, there are sometimes important nuances in the definitions of market value depending on the context of the appraisal. For example, definition of market value for condemnation appraisal in New Jersey is different for property taxation appraisal in New York. Investment value is the value of a property to a specific investor. It is similar to a value in use. An investor may go to an appraiser with a specific investment requirement that reflect their needs and investment goals and may require the appraiser to consider these within the appraisal assignment when determining investment value. Note that this value is specific to one investor or entity, which could be different than the value to another investor or the marketplace. On the other hand, an investor may have requirements that are typical or average in the market, which could make the investment and the market values similar or even equivalent. Fair value is often used for accounting and tax purposes, commonly for use within IRS and SEC issues. The U.S. Financial Accounting Standards Board, FASB, defines fair value in summary as the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Similar to the requirements for market value, the definition requires that the transaction have exposure to the market and that market participants be knowledgeable and willing. In most situations, fair value is equivalent to market value. However, the appraiser should not always assume they are the same. An appraiser may need tax counsel to discern these occasions. Use value is the value of a specific property with a specific use. Appraisers for market value, also referred to as exchange value, assume that the property is put to its highest and best use. However, for some purposes and circumstances, a client may want to know the use value of a property with a specific use that may not be the highest and best use. Situations when value assets are being merged, acquired, or reported may require a use value. Going concern is defined as all tangible and intangible assets of an established and operating business with an indefinite life. Thus, the value of going concern would include the value of tangible and intangible assets. It is often synonymous with business value. This value includes real property, personal property, financial assets, and the intangible assets of the business. Examples of properties where the real property assets are integral parts of a business include restaurants and hotels, theaters, nursing homes, hospitals, power plants, utilities, refineries, and factories. The concept of public interest value relates to the use of a property for non-economic uses, such as civil, governmental, community, and public uses. These public interest values can include preservation and conservation value, aesthetic value, and natural value. For public interest values, appraisers would need to consider the goals of the public, socially and politically, instead of only considering economic incentives. Alternatively, an economic use is an essential part of the determination of an asset's highest and best use, which is required for all market value appraisals. For this reason, some appraisers will not utilize data on government entity purchases and sales in their appraisal analyses. However, the data is probative to market value if the public entity acquired or sold assets based on market value assumptions, highest and best uses, economics, and/or at market rates, rather than public interest value assumptions. For underwriting an insurance policy, the appraiser may be asked to find insurable value. To calculate insured value, the replacement or reproduction cost new and/or depreciated that are qualified under law and/or insurance agreements are calculated in the appraisal. Land value is typically not included in this calculation. Other items that might be classified as indestructible may be excluded, such as site improvements or foundations. Based on client interviews, research, and deliberations, the appraiser will need to define what is included and excluded in insurable value and emulate the definition with their analysis. Furthermore, under assumed or real distressed conditions, a property may not reflect otherwise normal market conditions or value. In such conditions, clients may require a liquidation value. These values may be used during forced sales. Under many of these value definitions, the exposure time on the market, the marketing time, is limited. A recognition of what is called market is important in these determinations. Given the variety of value definitions and their potentially significant impact on value conclusions, it is important that the appraiser first properly select the appropriate definitions and then clearly report in the appraisal the meaning of definitions utilized. This is a use-pat requirement. While many of these definitions of value are interrelated, it is important to apply the correct definition of value in every situation. Federal Appraisal specializes in the appraisal of complex issues such as these unusual types of value and the circumstances in which they arise. We can help determine the type of value is required for any given purpose and use, so leave a comment below or contact one of our appraisers for personalized information. If you enjoyed this video and want to see more like it, hit the like button and subscribe down below.